Hey everyone, Meet Kevin here. In this video, I want to give you a quick breakdown on whether or not you should buy the company stock Zoom, that is shares of the company Zoom, the video conferencing app where people use it for work instead of flying, or people use it to play games and hanging out with each other when they're on lockdown. The company has blown up its valuation throughout the pandemic. It's probably been the hottest pandemic stock, and it makes you scratch your head and wonder, did I miss out? Is it too late to get in on the boat now? Or would I just be FOMOing, buying at the top, and riding this thing straight down? Well, my goal is to give you a quick breakdown of a very quick analysis that I did on the company, and I'd love to hear what your thoughts are on it. So the first thing that I noticed when I looked at the company was between May 8th and May 11th, a lot of the directors started dumping a lot of the shares. Now, they did just get assigned some new shares, so it's quite possible that a lot of these folks got some new shares, like their managing directors or their CEO, and then they dumped the shares because they wanted to put some more cash in their pocket, or they wanted to diversify. But for me, if a company's doing really well and it's going to kind of keep that momentum going, I usually don't love to see the directors and the CEO and everybody selling stuff. In fact, in this case, the managing director sold about $500,000 worth of shares. On May 8th, the chief marketing officer sold about $400,000 worth of shares on May 8th. 2 days later, that person sold $1.5 million worth of the company stock. The CEO sold $11.3 million worth of the stock. And even the chief legal officer sold $1.26 million worth of the stock. Now, that person does apparently own around $43 million worth of the shares, so he kind of sold like a little sliver for the chief legal officer at least. But still, a lot of people kind of reduce some of their holdings, and it kind of makes you wonder, okay, well, they were doing that all when the stock price was around $164. So, I'm not gonna put a lot of heavy weight on that because again, if you're working for a company and a company goes BK, well, then you lose your job and you lose all your stocks. So sometimes it makes sense that executives want to sell some of their shares and put the money somewhere else. Okay, I get that. So let's put that aside. Let's just simply ask, is the growth the company is experiencing sustainable? Well, in the 3 months ending April 30th, the company increased revenues year over year from $122 million all the way to $328 million. That's an almost 268% growth. That's a lot of growth. That's really good. And so what is the company seeing in terms of future growth, and what future growth would actually make the company worth $208 per share at the time of this recording? Well, that's exactly what I wanted to figure out. And see, for me, I always like to look at the company's stock price. I go, okay, it's $208 today. What is it realistically going to be worth in 2 years? And what is it going to take to make that number happen? And then do I think that's sustainable? It's just guessing, right? A lot of times that's the best we can do, is we make an expectation and we try to look for indicators that we're right or wrong. Well, here's basically the bottom line of the math that I had to do to make this actually work. For Zoom to trade, and this is a little complicated, I'll just say this quickly. For Zoom to trade at a 39 times price to earnings ratio in 2022, that is, for Zoom to be worth $208 in 2022 at a somewhat reasonable market value for a tech company and for Zoom, they would have to double their revenues in the next 12 months. Then they would have to double their revenues again in the next 12 months thereafter, and they would only have to increase their expenses by 50% in each of those 12 months periods. So it's kind of like the company kind of saying, okay, we got a cash cow. Let's lower, slow the growth of our expenses for the next couple years, and let's just keep blowing up in growth. So that's the assumption I had to make. And when I make that assumption, the company is worth $208 in 2 years. That is, in 2022, it's worth $208 at a price to earnings ratio of 39, which is kind of reasonable. Today, it's selling for 520 times earnings, okay? That's why you would see some growth in the same stock price. So then you have to ask yourself, okay, well, is that growth sustainable? And could the stock sell for more if that growth sustains itself? And yeah, it could. The stock could definitely go up. But for it to be worth this price, the company has to double its revenues over the next 2 years. Twice. That is double over the next year and double thereafter, and their expenses only go up by 50% each time. If you believe that's sustainable, then yeah, Zoom might be a stock to invest in. For me though, it's a little bit kind of like playing with a really nice piece of mosaic and glass. Sure, it could go up in value really fast because it's beautiful and it has all of this potential, but it sells for a really big premium based on somebody taking real careful care of that piece of glass, AKA that growth continuing. And if anything hurts that growth, the stock could really get slapped. That is, even a little bit of a dink on that glass mosaic you got could cause a lot of damage in the stock price. So, am I going to sell shares of Zoom? Well, I don't own any shares of Zoom, but would I short the stock? No, I probably wouldn't bet against the company, although I do believe that a company like Microsoft, Facebook, or Apple can kind of replace what Zoom is doing. That's my personal opinion. We know Facebook's already trying, but honestly, I tried out Facebook's video conferencing app and it doesn't hold a candle to Zoom. So at least for the time being, Zoom's doing pretty well. But in the meantime, I think I'd rather put my eggs in the basket of a company like Tesla or Etsy, where I don't have to expect such massive returns over the next few years to feel comfortable in even what today's stock price is. It's not super exciting for me. Now, if you're thinking about buying Zoom, you have to agree with everything on this whiteboard. But first, make sure to get your life insurance in the link down below. Get 2 free stocks when you deposit just $100 with Webull. That is literally take $100 from your savings account, put it into Webull, and boom, you get 2 free stocks up to $1,400. Do those 2 things, and then here, decide if you want Zoom, okay? So, if you are buying Zoom, you are saying that you believe this is realistic. And remember, these are just my projections, so they could be off. They're pretty much guaranteed to be off, okay? I don't have a crystal ball. But you have to believe in this style of growth. So you have to believe that the company can grow basically double, twice, that its OpEx, its operating expenses will only increase by 50% during that time. You could play with these numbers, obviously. You're not worried about Apple, Microsoft, Cisco, and Facebook basically bankrupting Zoom, okay? You're not worried about privacy, which the market kind of shrugged that off, like the whole Zoom bombing and stuff, that a lot of that got shrugged off. And you really believe in this move towards staying home. And if you believe in this sort of shift towards staying home, then you know what? Maybe this growth won't happen in the next 2 years, but maybe it'll happen in the longer term. But for now, I kind of like to put my money where I see growth happening within the next 2 years. So yeah, I mean, look, is it possible that that kind of rate is going to continue? Definitely. So that's why I'm not betting against the company, but I'm also not buying into it. It's very richly valued, in my opinion, but if it sustains the growth, it could be a phenomenal company to buy. To me, I kind of rather go to the casino and put all my money on black. Okay, maybe that's a little extreme because realistically, I'd rather put my money in Zoom than playing roulette, but I think you get my point in my opinion. So if you like these kind of shorter stock market videos, let me know. I'm happy to do more on little individual stocks. I'll give you a quick opinion on them. Don't trade based on my opinion. This is totally my opinion. So if you lose money, don't sue me, bro. I still love you though if you follow my advice or you don't follow my advice or you dislike the video. But if you have some other opinions, I'd love to hear what your thoughts are in the comments down below. In the meantime, cheers folks. We'll see you next time.